Well, I mean, you've already said it, that the market really is focused on this reopening trade for now. And you could take this as being really quite amazing. If we look at the huge amount of risk that we have on the table, we have, of course, as you mentioned, that the tensions between the US and China probably going to worsen into the US election. We've got riots on the street in the US. We've got mass unemployment in the US and rising unemployment, of course, in Europe and elsewhere. You have this trend towards pulling or moving away from globalization, which has already started last year during the trade wars, and that is likely to be accentuated by the coronavirus effects and countries wanting to protect supply chains, particularly with respect to medicine perhaps and maybe food. And all of these are disruptive for supply chains. You would imagine they're disruptive for company reports. And yet the market is still extremely focused on the fact that we have a reopening of the economies. And of course, we have a huge amount of both monetary policy stimulus and fiscal policy stimulus. And certainly for both of those, it is quite likely that during the course of this year, we will see more in terms of more stimulus. So the market's very much focused on that. And you've got to ask the question, is that going to carry on? A market's going to remain optimistic? Or actually, is the bad news at some point going to tip the balance? And are we going to see a big correction in stocks and risky assets and maybe then a movement back towards the dollar and the yen?
Jane, can I just ask you about cable at this point? Because we've seen the pound push back through 125 here. There does seem to be some optimism, I guess, as reported by the Times and some other outlets, that there are going to be some concessions in the next round of Brexit negotiations, and that may be what's pushing the pound a little higher here. What's your analysis on this, and would you be a buyer or a seller at 125?
I think I would be a seller. I mean, certainly we've got to factor in the fact that the dollar is weaker here, and that's one of the reasons, of course, that's accentuated the move on cable. That said, sterling is also a little bit stronger against the euro, reflecting some of this optimism. But if we stand back and look at the fundamentals that we've got for the UK economy, we've got plenty of reason to be sceptical as to whether or not the EU and the UK will really be able to thrash out a trade deal this week. If you look at the results of the last round of trade talks, they were not good. Neither side was optimistic about this. There's an awful lot to be covered in just a very short space of time. And we've had, of course, the UK last week again reiterate that they will not be asking for an extension for the transition phase beyond the end of this year. So we have the possibility that we will have confusion at the borders from the start of next year, that we will not have a trade deal between the EU and the UK. Now, that could add to the scarring of the economy that the Chancellor Sunak has talked about. The scarring, of course, also caused by the fact that we've got such a high mortality rate in the UK that is likely to mean that consumers and workers could be less willing to go back into the workplace, go back into shops, for instance. We've already seen that with teachers and parents reluctant to go back into schools despite the reopening this week. So that could lengthen the recessionary conditions in the UK too. And of course, that means that the Bank of England, as well as the government, may have to do more. And that leaves the possibility of maybe negative interest rates on the table for the UK, another negative factor. So I think for the pound, there's an awful lot of headwinds to get through. If there was a deal this week, yes, I'll be buying the pound. But to be honest, I think there's got to be a strong risk that they don't manage to pull that one off.